All right, good morning, good afternoon, and good evening, depending on where and when you're watching this video from. I'm Frank by name, aka Frank FX, guys. Today I'm going to be introducing Forex. Today's topic is going to be introduction to Forex, guys. So I'm going to go straight to defining what Forex is. All right, I'm going to be defining Forex. So I'll just go straight to defining Forex right now. So Forex is the short form of foreign exchange, so you can call it foreign exchange. It's also known as foreign exchange. It's just the short form of foreign exchange, guys. The definition of Forex, right? Forex or foreign exchange is the marketplace for trading national currencies against one another. It's the largest financial market in the world with a daily trading volume exceeding $6 trillion. So it's a place where currencies are being exchanged, like trading two currencies, like trading one currency for another. So that's just all about Forex, just trading of two currencies or maybe stocks or something else, because they have different types of markets, guys. So Forex is mainly currencies, guys. All right. Forex impacts international trade, tourism, and investment as currency fluctuations affect the value of goods and services. So, for example, if the euro strengthens against the United States, European goods become more expensive for Americans. So, for instance, let me take, for example, Nigeria and US. So, if the United States dollar becomes more stronger than naira, just as it's happening now in our current situation. As you can see, US dollar is 1.7 in naira. So if the US dollar is stronger than it becomes more like higher than naira, so you see the goods out there outside become more expensive for we Nigerians to get. So that is how it is. It affects the economy. All right, now I'm going to be talking about currency pairs. All right. What's currency pair? Currency, for you to trade forex, you need to trade. For you to trade forex, it involves two country currencies, which is currency pair. Like for instance, Great British pounds and United States dollar, which is Great British pounds and United States dollar. So this is one country currency and this is another country currency. So the two has to be together, which is currency pair. Yeah, it's called currency pair. The two like this is called currency pair. For you to trade, you have to trade it, like you have to trade it together. You have to exchange one for another. You have to exchange one for another. So guys, these two country currency, one of them is called the base currency and the other is called the quote currency, right? Which is this first one, GBP, is called the base currency and the second is called the quote currency, right? So now if you're buying GBP USD, if you're buying GBP USD, that means you're buying GBP against USD. You're initially saying GBP currency is going to be stronger than USD, right? That's to say the Great British pounds is going to be stronger than the United States dollar. But if you're selling GBP USD, you are equally saying the United States dollar is going to be stronger than the GBP USD, is going to be stronger than the Great British pounds, right? That's what it means if you are buying and selling. If you're buying this, if you're buying the GBP USD, don't forget it involves two currency pair. Two must, like, it must go together for you to trade it. You must exchange one for another, right? Is either you're buying GBP USD, is either you're buying GBP and selling USD, or you're selling GBP and buying USD. So it works together. That's why it's called currency pair. So market participants, who are the market participants, right? So the people involved in the financial market, which is Forex, the central banks, commercial banks, hedge funds, corporations, and retail traders. So Those are the people involved in the forex markets. We are called the retail traders. You are called the retail trader because we are the smallest of all, right? So these people called the central banks, the hedge funds, those are the big players in the forex industry. Those are the people who sometimes controls the market. They controls the market because they deal with larger funds, right? They trade with larger funds, so they can move the market sometimes. They can manipulate the market sometimes. Now we are going to be talking about forex market hours and trading sections. 24 hours market. Forex operates continuously during the trading week, allowing traders to participate at any time that suits their schedule. So initially, forex is all over the world, right? You can trade forex from anywhere, right? So now forex has like about 4 trading sections which allow traders to trade at any time. That's why the forex is open 24 hours, right? So we have like 4 trading sections, which is the Sydney sections. It opens at 10 p.m. GMT, lower volatility and trade volume typically quiet. Tokyo sections open at 12 a.m. GMT, significant for Asia currency pairs. Then the London section opens at 7 a.m. GMT, known for high liquidity and volatility, particularly during overlaps with the other section. And the last one is New York section, opens at 12 p.m. GMT, heavily influence major currency movement due to US economic releases. So these are the four sections in the forex market. So as a trader, you choose the one that is most convenient for you, and based on, because not all traders are full-time traders. Some people are people um that work under people, and they want to trade forex also, so they have to find time that suits them, which is, for instance, maybe you go to work in the morning and close in the afternoon. So for you to trade, you don't have to trade while working, so you have to wait after work, then come back and trade. So that's why everybody has their own time, and their own time they can trade, right? They have their own time that suits them, which they can trade.